This diamond insight of the local private sector being collateral damage on a path to economic recovery. One of the promises that the UPND government made before taking over the reins of power from the PF was achieving economic stability, recovery and growth. Achieving the aforementioned goal has however not been a walk in the park due to a cocktail of factors such as geopolitical events whose ripple effects are crippling import-dependent countries such as Zambia. The external challenges have compounded domestic constraints such as double-digit inflation and depreciation of the kwacha against the US dollar. In addressing these internal challenges, we have seen both the fiscal and monetary branches of the Zambian government swinging into action. The central bank in the last 2 months has revised upwards the statutory reserve ratio 3 times in a bid to contain high inflation and capture the falling kwacha. The Ministry of Finance, on the other hand, intimated mandatory transfer of government deposits from commercial banks to the central bank. While these measures are necessary to address the current fiscal malaise the nation is facing, it is worth noting that their impact may be far-reaching on key aspects of the Zambian economy, such as the local private sector. While the kwacha and the cost of living are being given lifelines, less money in circulation and the high cost of borrowing are serious problems that continue to choke the SME. Since the last statutory reserve ratio announcement, banks have adjusted their budgets to respond to the shock of a jump from 17 to 26%, but what cushion does the local private sector have? The private sector that will be contending with the consequences of these policies is expected to fervently contribute to national domestic resource mobilization through taxes without fail of compliance. In fact, the taxman has a target of 125.3 billion kwacha this year, which will mostly come from the formal sector, where the majority of businesses are failing to get by due to tight liquidity conditions, interest rates, and penalties from statutory obligations. If not checked, we may see a situation where local businesses are forced to downsize or simply shut down because banks will apply brakes on lending, as their focus will be to fulfill their statutory reserve deposit threshold, and if they did have enough to lend, it certainly won't be cheap. Therefore, we ask the government to strike a balance between containing inflation, stabilizing of forex, and ensuring that the private sector is not suffocated till they die. President Hakainde Hichilema and his lieutenant at the Ministry of Finance, Tumbeko Msokotwane, please, we beg you, as you fix this economy, ensure that the local private sector does not become collateral damage. How, Mr. President, when you're preaching jobs, will the people in the private sector create jobs when the environment for growth is not conducive, as we are being choked with garnishes, taxes, and indeed high interest rates amidst a free-falling kwacha and indeed high inflationary pressures?